All right, let's dive in. The global oil market has been on an absolute roller coaster lately, and this week we're going to try and make sense of the chaos. We're going to break down one incredibly wild week to see what it tells us about the forecast for 2026, where a world practically drowning in oil is on a head-on collision course with some explosive geopolitical risks.
So, how are we going to untangle this mess? Well, we've got a roadmap. First up, we'll look at why the world seems to have way too much oil on its hands. Then, we'll see how geopolitical fires are threatening to burn right through that surplus. After that, we'll dig into a pretty clever financial maneuver that's changing the whole game and a major power shift in who's actually buying all this oil. And finally, we'll put all those pieces together to figure out what the heck the future holds for 2026.
So let's kick things off with the single biggest, most fundamental force pushing and pulling the market right now. There is simply too much oil. I mean, the market is staring down the barrel of a massive, and I mean massive, looming glut. 4 million barrels. Just let that number sink in. That's the daily surplus the International Energy Agency is forecasting. It's a level of oversupply that's keeping oil producers up at night, something we really haven't seen since the absolute chaos of 2020. And it's all being driven by booming production over in the Americas, happening at the exact same time that demand in other parts of the world is starting to look a little shaky. Now, a world of cheap oil creates some very clear winners and losers. For oil-producing countries like Saudi Arabia, it's a huge fiscal headache. But on the other side of the coin, you and I, the consumers, are getting some serious relief at the pump. I mean, in the US, for example, the price for a gallon of gasoline just dropped below $3 for the first time in 4 years.
But here's where things get, well, completely contradictory. Just as all the market fundamentals were screaming oversupply, a single week of geopolitical drama just lit a fire under prices, pulling them in the exact opposite direction. Just look at this timeline. That week was absolutely wild. It was this constant barrage of conflicting news. We start with a Russian oil facility getting hit. Then you get a glimmer of hope with some peace talks. But that hope is quickly gone. Then, seemingly out of nowhere, the US starts making noise about Venezuela. Every single one of these headlines sent shockwaves through the market, causing prices to swing like crazy, day after day.
And this right here perfectly captures that core tension. On the one hand, you had the idea of peace talks, which would mean more Russian oil hitting the market. That's bearish. It pushes prices down. But the reality on the ground was a brutal escalation, with Ukraine hitting Russian energy infrastructure hard. That threat to supply? That's bullish, and it sends prices up. And we see the exact same thing play out here. Market fear clashing with cold, hard reality. The threats of military action in Venezuela, yeah, that definitely spooked traders. But here's the thing. Venezuela's oil industry is a shadow of its former self. It produces less than 1% of the world's oil, so even a complete shutdown would barely make a dent in global prices.
Okay, let's shift gears and talk about something happening a little more behind the scenes, but it is a huge deal. You see, with the stock market kind of lukewarm on oil right now, there's a major shift happening in how the industry gets its cash, and it's all being driven by big private money. This quote from a private meeting just says it all. The public stock markets are turning a bit of a cold shoulder to oil. So the message to executives is pretty blunt. You need to find your money somewhere else. And that is exactly what is happening. So here's the clever financial play they're running. Oil companies are selling off their super reliable cash cow assets, we're talking things like pipelines, to private funds like BlackRock and Apollo. These funds are more than happy to pay a premium for those steady returns. We saw it with Saudi Aramco's recent $11 billion gas network deal and with Shell selling its stake in the U.S. Colonial Pipeline. For the big oil companies, it's a massive injection of cash to pour back into their main business. Now let's switch from supply and finance over to the other side of the equation, demand. And what's happening here is, honestly, a historic handover. The entire center of gravity for global oil consumption is shifting across Asia. This chart, this is a really, really big deal. For the first time, like ever, India's growth in oil demand is projected to actually surpass China's. As you can see, by 2026, India is set to become the new engine of oil consumption growth. And this isn't just a blip, it's the very beginning of a massive, long-term power shift on the global energy map. So the big question is, why? Why is the world's biggest oil importer suddenly hitting the brakes? Well, the answer is sitting on their highways. Electric vehicles. The explosive growth of EVs, both cars and trucks, means demand for regular old gasoline and diesel is just plummeting. In fact, a lot of analysts now believe China's right on the verge of hitting peak oil, that moment when its consumption starts a permanent decline. Okay, so let's try and tie all of these different threads together. We've got a supply glut, we've got geopolitical chaos, this new way of financing things, and demand that's shifting on a dime. What on earth does this all mean for the oil forecast for 2026? When you boil it all down, it comes to this one fundamental battle. The entire forecast, everything, hinges on which of these two powerful opposing forces wins out: the crushing weight of oversupply or the explosive potential of a geopolitical conflict. So we're really left with two completely different possible futures. On the one hand, you have the bearish case, the argument for lower prices, and that's all about the numbers. A 4 million barrel a day surplus is just too big to ignore. But then you have the bullish case, which is all about the unpredictable wild card of conflict. A major escalation in Ukraine or some new flashpoint somewhere else could trigger a sudden supply shock, sending prices through the roof overnight. And all of this leads to one final crucial question for all of us. As the old rules of the oil market start to crumble, a whole new energy map is being drawn. New winners and losers are emerging. And who they're going to be, well, that's the story that will define the next decade. Thanks for tuning in.